Hey, what's going on, everybody? This is your boy Corey Smith with CMT Financial, coming back to you. The topic that we're going to talk about today is kind of a market update when it comes to lending on the mortgage side. What I've seen is, and what I've heard is, a lot of my agents have called me about information that they've heard from other lenders that are not 100% accurate. So I'm just kind of here to give you a little bit of market update about what's really happening in the market during this pandemic, right? Um, January, February, everything was kind of still normal or whatever the case may be. But then all of a sudden, the whole pandemic hits. It changes everything and turns everything upside down on its head. When it comes to the lending side of things, things start to change because as the government starts to make new rules, they start to, kind of change the scope of the way lending has to happen. Each company has to make their own decisions about what's beneficial for them. So I'll give you an example. One of the main ways things have changed is that a lot of lenders have started to come back and talk about they have changed. The FHA has changed their actual minimum credit score to a 680 or a 660, whatever the case may be. So I'm here to tell you that it's not accurate at all. FHA hasn't changed anything. When it comes to those stipulations, those are what we call overlays. Overlays are rules that are brought about on top of the actual guidelines that are set by the investor. So, for example, FHA, who makes the rules for FHA loans, is HUD. Who makes the conventional rules are Fannie Mae and Freddie Mac. So what happens is that the rules start to change based upon the relationship of the actual bank with these investors. Well, the great thing is CMG is direct. So with CMG being direct, we don't have the same type of relationship as these other banks do. These other banks have to worry about trying to sell their loans to other banks that eventually sell their loans to the investor. Well, when you go direct, you don't have to have the same overlays because we're not vulnerable to the rules that another bank comes up with. We're going directly by the rules that are given to us by HUD, Fannie Mae, or Freddie Mac. So the great thing about it is that when an investor or a lender tells you that FHA has changed their rules to a 660 minimum credit score or a 680, is just completely not true because we're still lending it down to a 580. So if you have a 580, you can still get a loan, right? So I just want to kind of clarify a whole bunch of the misconception that's going on out there. Now, I will tell you this: the landscape of lending has changed. No getting around it. And it has changed for all the banks out there, and it changes differently according to, like I said, what bank it is. The main thing and the main issue that I see now that has changed is the need for forbearance and deferment payments. Essentially, the rules that are set in place is actually hurting the people that it was supposed to help. So now, let's say you are a homeowner and you chose to go into forbearance or you chose to go into deferment. Because why not? It sounds good. 3 months, 4 months, no payment, or even 6 months. Some services are doing of no payments. So why not take advantage? That gives you a chance to kind of keep your head above water or even get ahead because I don't have to make that monthly payment. I can contribute that towards something else. Well, the problem is that now if you're in deferment and you don't actually make those payments, fat chance you'll be able to refinance and get a lower rate. They have all these stipulations in place to kind of persuade you not to take on the actual forbearance and deferment. But the problem is that they didn't actually set the rules until after they already came out with the whole thing about deferment and forbearance, and everybody had already jumped on the craze to take advantage of it. So I'll tell you this: every situation is different. So you definitely need to contact the lender if you want to refinance. But I will tell you this: the chances of you missing payments and then actually being able to immediately refinance is pretty much going to be slim to none. Okay? So what you definitely want to do is contact a lender, such as myself. Let's talk about your specific situation and talk about what exactly you need to do to be able to take advantage of these low interest rates. You shouldn't be punished
for the deferment, the forbearance that you took upon. But unfortunately, the rules are set in place for that to happen now. All right, so let's move on to the next thing. The great thing about a pandemic is that the rules now could easily change tomorrow. These are constantly moving targets, just depending on what happens with the government, what the government says, and then what a lot of the professional consultants and stuff like that, what they have to say to the investors. So these could change. This is the rule now, but 6 months down the line, it could change. It could be no problem at all for you to refinance, even if you were in forbearance or deferment. That's why it's great to contact the lender. Don't assume. Come and get the right proper education and the proper information in order to help your situation. As of right now, stuff is still rocking here in Texas. Texas is at the highest level it's ever been. If you want to purchase a property right now, now is the best time because rates are so low. If you want to refi, now is the best time because rates are so low. Nobody has a crystal ball. Nobody knows what the rates are going to do in the future. So you need to take advantage of them now. I say that to say, if you're going to purchase an actual property now, you can get a chance to take advantage of the low rates, but you have to be patient during the process right now. If you can imagine, because rates are low and activity is up, especially here in Texas, I can't speak for other markets out there, but especially here in the Texas, appraisals are taking a lot longer than they used to. And the reason being is because everybody's refinancing. The demand has gone through the roof. So it used to take us 7 days to actually be able to get the report back. Now it's actually taking more like 10 to 12, maybe sometimes even a little bit longer. Let's talk about refinances for a second. Refinances are taking a lot longer than they used to be. You used to be able to do a refinance within 21, 30 days. Well, now it's more like 45, 60 days. And even with some banks like Bank of America or Wells Fargo, they've completely stopped taking applications altogether. Or they have the minimum requirement to only do 700s because the demand is so high. They only want to kind of cherry pick the easy good deals that they don't have to work hard for and that don't take much time. So now the scope has changed. The best thing for you to do is actually contact a professional. Let's talk about your specific situation. I'm doing this on a daily basis. I understand and have my eye and my mind and my ear to the ground to keep a pulse on the market of what's happening on a daily basis, because it's constantly a changing thing, a changing target on a daily basis. So if you are curious about your situation, or you even want to know if right now is the best time for you to refinance or for you to purchase, give me a call. My number is 832-297-7659. Again, 832-297-7659. Let's talk about it. My name is Corey Smith. I'll talk to you later.